Hi everyone and welcome to today's morning report. Charts appraisals on Wednesday 4th of October with me, Rich Perry, market analyst at Hantec Markets. We've got a little bit of a dollar correction going on today. Let me show you the markets board. Across the forex majors, the dollar is weaker. Euro, sterling, Japanese yen is stronger, and across all the commodity currencies as well. Gold is also higher, and why is all this coming on? Well, we've seen treasury yields which have just dropped away slightly on the 2-year and the 10-year, both lower. And why is that happening? Because we saw a jump on Monday on the back of suggestions that Kevin Warsh was going to be in the running for Fed chair. Kevin Warsh is certainly on the more hawkish side, but subsequently yesterday we saw Jerome Powell coming into the equation, and Jerome Powell is far more on the Yellen sort of scale of sort of dovishness, or certainly along the lines of what or how Yellen views monetary policy. And so subsequently markets have paid attention to that and pulled these yields back, and the dollar has suffered on the back of that. A little bit of a correction, but nothing too significant quite yet. But I'll show you through these forex pairs a little bit later that is this move the beginning of a dollar correction, or is it just a little consolidation within the dollar strength trend? But generally speaking, equities are slightly ticking lower now. The DAX is playing a bit of catch up, having been on holiday yesterday for Unity Day. The CAC is mildly lower. FTSE turned a bit lower on the back of the UK PMI, the service sector PMI, which for the UK came out just earlier, and a very mild beat on the upside, so subsequently sterling rallied and the FTSE lower. That sterling negative correlation with the FTSE 100 remains a key factor for UK traders. So broadly speaking, not a great deal impacting the markets today, but the service sector PMIs will be in focus, and the ISM data this afternoon. I've just noticed I haven't written it on there, but this ISM data this afternoon is going to be key. That is at 3 o'clock. It's expected to tick mildly higher to 55.5 from 55.3, so that will be the key focus this afternoon. Then we've got the EIA inventories, so mild drawdown on crude and distillates, and a mild build on gasoline expected. So my chart of the day is Euro Sterling. Now this is an interesting chart because we've seen, sorry, that's the hourly, and that's also not Euro Sterling. Sorry, my fault. We've also seen a little bit of a recovery in the last few days. I talked about Euro Sterling last week as it sort of returned to this big long-term uptrend, and this is a long-term uptrend. That dates back to 2015, late 2015. And it held that uptrend, but it also held the support at 87.40. And the market has subsequently embarked on a bit of a rally with 3 strong bull candles in a row, and that has certainly picked up all these momentum indicators, the MACD line crossing higher, stochastics crossover buy signal, and the RSI gaining traction now above 40. So is this going to turn into a little base pattern? 88.80 was an old high, became supportive, and again become resistance. And again, that was tested yesterday, and the market has just turned back from that again today. So that is clearly a level that the market is looking out for, 88.80. So breakout above that, or certainly on a closing basis, would complete this little base pattern, confirmed above that reaction high at 89 figure. So basically above 89 figure, you could argue. So you would then start to measure a recovery target. That's what, about 160 pips of target to the upside. So you then start to think about where that's going to go to. Where would that be? Where you think about the 89 figure old pivot, I think is certainly as an area where the market could easily come back to. So if that is seen above 89 figure to confirm, above 88.80 to complete. So what are we seeing? Well, we're seeing a succession of higher lows on Euro Sterling. You've seen a move lower on the UK Services PMI. That's dragged it lower, but the support comes in at 88.20, above 88 figure. And you've seen the hourly RSI consistently around about that 45 to 50 area finding support. So this little correction on euro sterling now is a key move. If it goes below 40, I would say that that could be struggling in terms of the rally. But for now, we're still running these higher highs and higher lows, and that 55 hour moving average is a bit of a basis of support, and you're not a million miles off that now. So this is a key move. So for the continuation of this recovery trend, this is a key little correction on this service sector PMI. So will this continue to move higher and put pressure on 88.80? That is the key question today. So I wish you good luck in your trading today, and I will speak to you later. Thank you.